Hi, my name is Alex Carlucci with Gustan Cho Associates. Going to talk to you about condominiums and what you guys need to look for in the pitfalls. If you're buying a condominium and you're buying and you're a veteran, or an FHA loan, you need to make sure that the condominium has been approved by VA or FHA before any bank's going to lend on it. Now, to do that, you just Google FHA approved condominiums in your county. Same with the VA. And hopefully it comes up. Sometimes it's hard to find it. You need to know the right name. Sometimes it goes by this name, but it's actually this name. So finding the condo on those websites can be very difficult. So if you're going to buy a condominium, you may not be able to get financing on it unless it's approved. So all single families are VA, FHA approved as long as they pass the appraisal test. If there's nothing wrong with the house, the gutters aren't falling off. But condominiums actually have to be on an approved list. So this isn't anything we can change. If they're not on the list, you can't get a mortgage on it. So make sure your realtor or whoever you're buying the house from can confirm that it is on that list for you. If not, you can call it or look it up yourself on the internet. Give us a call, we can help you with it too. It's very tedious to make sure, but make sure. Now, if you're gonna do a condo conventional, it becomes our problem to figure out if it's warrantable. Now, condos are difficult products to close on, but if they do pass these tests, they're fine. It's just a regular loan. But these FHA, VA rules, and now the conventional one, they have to pass a test. So the conventional one is it has to prove that it's warrantability. I spoke about this in another video. I'm going to speak about it again here. The conventional loan warrantability is basically these are the main topics. Is the owner occupancy over 51%? Does that mean is it 51% of the people who own the property live in the condominium? And the reason for that is for the people to keep up the property. Number two, does one person own more than 10% of the units? And that could be a problem for, the condominium could be at risk if one person were to go belly up, then they could take down the whole building. Three, is there any lawsuits? If the place is being sued for $100,000, that could take down the condominium too. So there's risk to lawsuits. If there's a frivolous one, we can get by those sometimes. So the frivolous lawsuits aren't such a big deal, but if there's a big lawsuit pending, you're not getting a loan. And then the last one, or not the last one, the second to last one is if there's foreclosures, like 10 or 15% foreclosure rate or more, you can't lend on them because now the condominium's not collecting the association dues, and that can weaken the strength of the condominium. The last one is, this one fails a lot, is that if the condominium's collecting $100,000 in association dues per year, if you add up all the units, then we have to ask for a budget. And in the budget, they better have 10% of that. So $10,000 has to be in a reserve account for any kind of emergency. So there has to be a reserve account with 10% of the total revenue of the condominium from association dues per year. So those are the reasons why buying a condo can be tricky. They have to be approved FHA, VA, and we have to make sure that they are approved for conventional ourselves. So those are the three types of loans that we have to do for types of condominium problems we have. So bear with us when we're doing condominiums, and good luck to you finding one out there FHA or VA approved. There's not a lot, and if they're conventional, they're about 60–70% of them are good. Now, don't be mad at us if they're not. It's not our fault. It's the person who bought the condo there and lives there and sold it to you. It's their fault. So please like this video and share it, and go to gustancho.com for more information on this at GUSTANCHO.com, or give me a call at 630-915-7550. Thank you.